Okay. Are we on?
So we're on now. Can everybody hear us?
Yes.
We're gonna go ahead and start the meeting.
Okay, good afternoon. I appreciate everybody in virtual land and those attending in person. We do have a couple board members that are gonna start trickling in here shortly, but we want to get started. It's gonna be a several-hour meeting. We got a lot of stuff we want to talk about. Obviously at a workshop, there's no decisions made, it's just more education purposes. And so what we'll do is we're going to start with our latest audit, and our audit firm is going to brief the board on what they found with the latest audit. So if you guys like to take it away, thank you.
All right. Good noon, everyone. My name is Fierce Kato. I am the audit manager for the FY25 audit. I'm from Singer Liwak. I'm joined by Kathy Wilson. She's the engagement partner for this year's audit, and then Brad Bingenheimer. He was the signing partner for this year's audit. So hopefully I can share my screen. I can see that another. I don't think it's allowed.
Go ahead. You should be able to now.
No. Kathy, can you try it?
Yeah, I'll give it a try. Hang on.
It's not working for me. Oh, there you go. Sorry. There you go. So if you you should have a copy. I think I've seen it in the attached email or the invite. You should have a copy of your financial report. And if you go to the opinion page, you'd see in there that on the first, on the third paragraph, on the first paragraph, you would see our opinion for this year's audit. It just says that we have audited the financial statements of Columbia River Fire and Rescue for the year ended June 30, 2025. And the above financial statements were presented fairly in all material respects. So this is a clean opinion or unmodified opinion. You'll also notice on the third section, we have an emphasis of matter for the basis of accounting. So the financial statements are presented in the basis of accounting, which is a modified cash basis, and that's other than generally accepted accounting principles or GAAP or US GAAP. And so because this is a modified cash basis, we do present that we just make an emphasis of matter paragraph to notify all the users that you would not find the accruals, you would not find capital assets in this presentation. You would only practically find cash and fund balances and certain modifications, which are also disclosed in the notes to the financial statements. If we go ahead to the financial statements, you will see that in the statement of net position, you would have cash and cash equivalents of about 5 million. That's also about the same amount or balance for your total net position. Large portion of that are unrestricted. There are only small balances that are in your special revenue funds that are for retired senior volunteer program and then recruitment. And you'd also notice that one of the modification that is considered by the fire district is the presentation of accrued payroll liabilities. This just means that these are payroll that has been processed, has just not been paid as of the year end. You will also notice in the next statement that there is a change in net position by about 1.4 million, which just means your net position is up. In a private company, this is typically referred to as net income. So your revenues are over your expenditures by 1.4 million. You'd also notice in the next financial statement, we call it the balance sheet at the governmental level. Cash and cash equivalents for general fund is about 4.3 million. That's also the same for your fund balances. And in that next statement, you would notice that your annual your total annual expenditures were about 9.6 million, and your ending fund balance is only 4.3 million. So that's your reserve for next year. That's about 45%. So your fund balance over your annual expenditure is about 45%. We typically find that fund balances, a healthy fund balance for a general fund would be over 50 or over 55%. So, and I know there has been discussions during the year when we read the minutes about, property tax collection and expenditure savings. You Part of the financial statements also is the pension trust. It's pretty small. It's about 391,000. That's the LOSAP trust that's included in the financial statements as a fiduciary fund. It doesn't flow into your net position. It's a separate financial statement. If you go all the way to the end of the financial report, you'll find that we issue another report that is required by Oregon state regulations. We call it the minimum standards report. So typically we do, as part of our audit, we perform certain procedures required by ORS, and we reported the following findings. So budgets legally require, for budgets legally required, there were expenditures in excess of appropriations, specifically for the general fund, fire operations, and that's about 285,000. The actual is over the budget. And then we've also noted in the in this current year's budget document, we noted that the district did not appoint a budget officer and that there were historical amounts that were not matching. There were amounts that were not matching to the historical audited numbers. So we're hoping that in the next budget year, those will be corrected. We've also issued another letter, and we call it the communication to those charged with governance. I didn't see it attached in the invite, but we would just like to highlight that we issued this to the board of directors of the fire district, basically just detailing what has transpired during the audit, what are our responsibilities, what are responsibilities of the management, and what were the findings that we noted. So this basically is just a summary of our audit. And I would just like to highlight that there's an emphasis of matter paragraph in relation to the cash basis of accounting. But what you won't find in here is the finding that we had in the prior years regarding non-review of journal entries, which has been a recurring management letter comment that has finally been addressed in the fiscal year 2025. So we've removed that. We did not issue any management letter comment this year. I believe those are those. Kathy, would you like to share some?
Yes, also attached to the governance letter, there is adjustments that were made during our audit procedures. And a big chunk of this is just the adjustment to bring those. Last year, you still had your budget with accrual balances. And so this was to bring those numbers back so that we could do modified cash basis. And so I believe we just had some small entries for correcting beginning fund balances. And then there was just a reclassification of the GMT revenues. Other than that, there was nothing significant. Management's representation is also attached to this letter. And that just states that they provided all the information that we requested and that everything that they gave us was complete and nothing was withheld. So very, very good audit this year. And you guys are finally caught up. I'm so glad. We're so glad to see you guys on track again. So great job. Open to any comments or questions that anybody has.
Sorry, give me a second. A couple of them came in late.
It's all right. No problem. happy to go over anything again if need be. So.
Rick, also, you guys came a little late. Is there anything you want them to maybe go back over?
No, I don't, right now, I don't see it.
Okay.
Well, from the, not worked off, you know.
Yeah.
I would like to add a thank you to Kate and everyone that assisted with the audit. And we appreciate your responsiveness and that allowed us to get in, get it done, and get it to you guys pretty early this year. So we were pretty happy with that.
Well, we appreciate you guys coming out and then not having to come out because it's, I know it's a little bit of a trip for you guys and you got to camp in Portland. So appreciate everything you guys did for our organization and getting us caught up and getting us back on track where we should have been a few years ago.
That's all on you guys. So we appreciate that.
It's anyways, it's not on the stairs, fit down, all right, yeah.
And just before you walked in, they brought about the reviews that are supposed to be done for the journal entries. And they actually moved that from this audit because we are doing those and we're corrected. And every audit we seem to improve. So it's a good thing.
That's the goal. That's the goal.
Austin, you have any questions for him?
I don't think so, I'm good.
Bryce, you have any questions for him?
Nope.
Mark?
No, I'm good. That sounds great.
All right, we want to move on to CPA.
Rick, do you have any questions for him, sir?
Nope.
Okay, well, we appreciate you guys taking your time out of your Thursday to be here, so thank you. Appreciate your diligence and the professional manner in which you conducted yourself, so thank you.
Thanks. Happy to be the auditors for the district. And if anybody does have any follow-up questions, Kate has our contact information, and I believe several of you do as well. So feel free to reach out to us if you need. So, all right.
Thank you so much.
Thank you, guys.
Thank
Okay.
you.
Bye all.
Okay, so the next section of our workshop today is Eric Titola, our CPA. He's got some PowerPoint and some information he wants to go over with us. He brings up on the state of the district, and he did some forecasting for us and where we think we're going and some things we probably need to work on. So Eric, whenever you're ready.
All right, good afternoon. So it was probably a month and a half ago that the chief and Kate had asked me about doing some projection forward in regards to looking at purchasing a fire truck. So I did some work, and then after that, they wanted me to do some more forecasting to bring it to you and share it. So that's what we're doing today. I've got a PowerPoint that I'm going to share, and then involved worksheet for you to look at. Can you guys see the presentation here?
Yes.
Okay. So because the worksheet is a lot of numbers and stuff, I put this together to just document the main points. So this forecasting model is looking at revenue, the personnel costs, and the capital outlay specifically. I wanted to show where I was getting my information from. I'm going to make this as big as possible. I don't know if you guys can see. So when I'm doing forecasting on the revenue side, I want to use actual revenue numbers from the past. And so when we get to the worksheet, we're going to see a few different categories of revenue just summarized into a few lines. So we have operating revenue, other revenue, and then other sources. The operating revenue is stuff that's going to occur consistently and reliably year after year. And what I have for that is categories of property tax and charges for services. There's other revenue that comes in every year, but isn't as reliable, and that's interest and miscellaneous, the stuff here. And then other sources are, random things that just happen throughout the year. So I'm pulling the revenue stuff from the audit. This is a screenshot of the audit, and I'm pointing at the numbers I'm using from the audit if anyone wanted to, just so you know where the data is coming from. So looking at the expenditure side, I'm sure everyone knows that usually all of what's budgeted to be spent is usually not spent, but we want to use the budgeted amounts for the expenditures because these are the maximum amounts that the district could spend. These are all the dollars that are authorized to spend. So if we were to look at the actual data, it's going to be under what is allowable for the district to spend. So being conservative, we want to use these bigger maximum numbers. So the expenditure data is just separated into the 6 categories of personnel, materials and services, which I'm going to call M&S going forward, capital outlay, debt payments, transfers out, and contingency funds. Because we're looking at like the operations of the district, I'm actually using the expenditures from general, the grant, and the capital funds, not just the general fund. So then let me tell you what I used for my assumptions. For revenue, we want to use the audited financial statements to show actual activity. We want to build the model using actual revenue. So we're projecting actual revenue numbers into the future. And following this conservative theory with accounting is that if we have to estimate revenue, we underestimate it a little bit in the hopes that more revenue comes in than what we guess. Expenditure assumptions, this is kind of what I just talked about. The adopted budget has the maximum allowable expenditures in it. And so we want to use those going forward because those dollars could be spent by the district. All of them could be. So being conservative, we're going to estimate that the district spends every dollar that they get appropriated. So before we get into the worksheet, some of the things I noticed pretty soon was that these are actual data here for years 2019 through 2025. The green line is how much property tax revenue comes in. And the red line are the actual personnel costs over these years. These amounts coming from the audited financials. These are really close together. So property tax revenue almost equaling the personnel costs. The other thing I noticed was that the charges for services is fairly closely related to how much is spent in M&S and debt. So just keep that in mind. And then we won't get to the general observation yet. So now we're going to look at the spreadsheet. Can you tell me if you can read all of this stuff or if I need to zoom in?
I can't.
Zoom in, please.
How about now? Still too
Number
small?
one or number two? No, a little more, Eric, please. You guys see that?
Almost.
We're almost there. Keep going.
Okay.
Is this clear or this clear?
How about now? I can keep going, so don't stop until you can see it.
Keep going.
Okay.
That works.
I'd rather you guys can see that.
Mhm.
Please, you guys need to move closer, you guys can.
Zoom in more.
Are you guys good there?
I can read it.
Okay, I think
We're
we
good.
finally, we might have reached it.
Okay. So this is going to be confusing a bit, and I've got to talk through it, so bear with me. I'm using the historical data from the audits in these years here, 2019 through 2025. And I've rolled all the property tax revenue into this line, the property tax revenue, all of it. There's a few different components to property tax revenue. There's the current year, there's previous years, there's interest on previous years, but all of the property tax revenue has been rolled into this line. These numbers down here, this is showing how much more property tax came in 2020 than 2019. So this is an increase in the dollar amount. And that is an increase as a percentage. I just like to look at these to see if it's kind of consistent year over year. And then just looking at the percentages kind of disregards the size of the dollar amount and just gets us down to the change. So, it ranges from 1.78% to 4.62%. Then the next major revenue piece is charges for services. That's everything like the GEMT, the ambulance, and any other things that the district charges for. Again, all those numbers are rolled into this line. Here's the dollar amount change and the percentage change. You can see this kind of wackiness here of 15, minus 16%, and 32%. I feel like this is really a timing issue about when cash came in and was recorded. So I wouldn't really be too concerned with this piece. It's just another way to look at the information. Then this line is other revenue, and this can be from any kind of stuff. This could be grant revenue, selling of equipment, or actually not selling of equipment, but just random revenue coming in to this line. This isn't repeatable revenue that the district can count on moving forward, because it's not predictable. So then down in the expenditure line, we have the six categories: personnel, M&S, capital, debt, transactions out, and contingency dollars. And these are actual dollars from audited financial statements. This data is missing, but let's not worry about it. I was not able to peel the dollar amounts out of the audit in a way that I could categorize this stuff easily. but it's okay. It doesn't really matter for this forecasting thing. So this line is the total requirements. And up here we have total resources happening. The next line we're looking at is this one, which is the revenue over under expenditure. So I'm sure you guys all know this, but I'm just going to say it anyway. When there's a parentheses for under, like this means that the revenue was less than the expenditures. This means that the revenue was more than the expenditures. So this is like the operating revenue, revenue over expenditures, like the day-to-day activities. And now here are those other sources, other uses, the really random things that happen through the year that are unpredictable. And these need to factor into this net change line as well. So for example, this 209,000 is the 437 plus the other things happening is 209,069. So that's just to explain this chart up here. Are there any questions about the historical stuff that we just went through on this spreadsheet?
No.
Okay, so now I'm going to talk about how I moved forward with doing the projections. So FY26 and 27, these numbers in here are coming from this forecast formula. And same with these amounts are coming from this forecast formula. So what this forecast formula does is looks at the historical data over the course of the year, and it predicts what the property tax revenue would be during this year. And it predicts what the charges for services would be for this year. And it's just happening in these 4 cells because we have budget data, and I was comparing that against this forecast. So let's just stick with this for a second. Looking at the forecast data, looking at these changes right here, I've determined that roughly the property tax goes up at about 3% per year. So these future years, starting with the year 1, these are simply taking the last year's property tax guess and adding 3% to it, and it extrapolates it out over, well, however many years. And the same type of thing is happening with charges for services. I'm seeing charges for services averages about 2.5% per year. So that's what this is. And then other revenue, same thing. I told you it was super variable, but I put $200,000 in here, and then it's just going up by 5% per year. So that's how we forecast the revenue. So next thing we needed to do was to work on the personnel costs, and I have a huge spreadsheet built for estimating personnel cost. The chief and Kate have had me doing some work to estimate how much a 2% COLA would cost the district. And so that's what this is. If they were to do a 2% COLA next year, that really increases personnel by 3.1% because there's health insurance increases and other increases as well. So a 2% COLA is not a 2% increase in personnel costs. It's a 3.1% increase in personnel cost. Then we also know that in 28, the PERS rate is going to go up, and it's going to add $30,000 to how much is being paid for PERS already. So I have that in here. This personnel cost is doing last year's personnel cost plus 3.1% plus the 30 grand. And then all these years going forward is an increase of 3.1%. Let me see if I can hide this row. All right, so that's the personnel. M&S, and another part of my sheet, I gave M&S a 5% increase year over year. And so all these future years are taking one of the years and just adding 5% each time. The capital line isn't going up at all. I talked to Kate and the chief about this. What they described is the number of ambulances they have and how often they get turned over. They need to budget $400,000 every year to deal with the phasing out of old ambulances and replacing them with new ones. So that's just the budget for the capital outlay there. The debt, what they have for debt so far is, what is the debt on again, guys? I forget.
The
Training
training ground.
The training grounds, okay. So when they asked about purchasing the fire engine, obviously we're going to have an increase in the debt payments. And so these $220,000 amounts are what the debt payments would be for that new fire engine. And so I'm adding the 190 and the 220, 385 to get to 410,385 debt payments. So what does that all mean? If they were to buy the fire engines, the revenue over expenditures here means that they're bringing in $434,000 less than they're spending. So this would be depleting a beginning fund balance or any other kind of reserve accounts that they have saved up. And they wanted to know what would happen, could they afford to get the fire truck? With the increase in personnel costs and the increase in debt, the big story here is that the ending fund balance in year 5 would be negative. So it doesn't look feasible to take on this level of debt with everything else that's happening. Are there any questions? Or Kate or Chief, is there something you want me to address specifically from here?
No, I think you hit it on the head, Eric. I mean, they're
He's tight.
obviously, clearly, we looked at doing a flex lease on an engine. We can't afford it. The big emphasis of why we asked Eric to present this is, I just told him, asked him to mirror last year's budget, and then what would happen if we add this stuff. So you can see last year we had a 3% cost of living. And with the purchase of an engine, you can see we will eventually fail. And fail, or we're gonna have to find another revenue source. That's the point. This is not, please, gentlemen, I want you to understand, and everybody in virtual land, we're not doing doom and gloom, but we've got to figure some stuff out. We have to maintain operational efficiency of the organization. We have to be able to provide some equipment for our folks to be able to respond. And it was great. We're getting an ambulance every year, but we're still gonna have fire apparatus that are gonna need to replace. So this is, we just wanted to bring it to the board and everyone's attention is that this is what we're looking at and then where we're at. We're on a razor's edge. And so, one slip one way or the other, we can fall off. So we just need to be diligent. We need to stay on top of this. I do appreciate Eric putting this guy. He forecast out all the way to 2037. I started crying because 2037 really looked bad. But at the end of the day is we have, there's things we can consider, and that's the things we're going to put our thinking caps on, looking for support for the board. It is going to require some monumental support from you guys to find other sources or how we're going to maintain and manage and continue doing what we do for the people of Columbia County.
Are these projections that Eric's doing based on staffing at full level?
Correct.
Okay. So once we get to the full level, this will be.
We will be at full level by February. And so it's so, but even we budget for full levels.
Yeah.
Yeah, so there's a few dollars that we haven't spent, because clearly they're not on yet. But yes, will be, we budgeted this year for having 30 and 8 Division 9 folks. 30 firefighters and 8 Division 9 folks.
I have a question, and I've never done this before, so bear with me. Eric, when you were first talking about the revenue and income for the property taxes and then the service charges, and you said that there was a 3% add for the property tax and then 2.5% for the service charge, is that just coming from the forecasting formula? So you guys are anticipating will be a 3% more coming in next year, or is it every year that 3% it goes up?
So Oregon is capped at 3%.
Mhm.
So
Okay.
we cannot, now, can somebody pay back taxes from 2 years ago? Absolutely, we can see there, you can get more than 3%, but generally it's from folks paying back taxes. Or there are some things that we'll talk about when Eric's done that I can shed more light to. But yes, it's at 3%. Now, can ambulance revenue, or I'm sorry, what's our primary revenue source beyond taxes go up? No, it's where it is. I mean, we're gonna see growth by number of calls. But we all know Medicare's capped, Oregon Health Plan is capped, and that is our biggest funders for the ambulance service. That's who we transport mostly. So, but he is seeing about a 2.5% on average.
Also, I should just say, the property tax can go up, this big, huge dollar can go up if there's a lot of development that happens in the taxing district. Like if there was a subdivision with 200 houses built, you know, it's not going to be limited to the 3% because now you have all of this new valuable property, so this number will bump up. So it's not just limited to 3% no matter what. It can go up if there's new housing or developments or something that comes into the district.
Eric, I know that you answered this for me, or sorry, Chief, that you answered this for me yesterday, but Dustin wanted me to ask as well. If you could just explain to him, like, what things would look like if the ambulance rates went up, which I kind of know you said it wouldn't change much because of the Medicare and OHP is what we bill and those are capped, but maybe you can.
So I can't speak to it. Thank you, Talitha. The ambulance rates, we could charge $10,000 to transport. It is capped at what it is. And you guys will see in the next presentation when we're done with Eric, the stuff they haven't seen it yet, Talitha, but how we collect money. On average, it's about $690 a transport on average, which means there's ones we don't get paid for. We collect 30 cents on the dollar. It is the common across the entire state. That's what even the private ambulances are collecting as well. What would see an increase in revenue is volume. So if our volume went up, there's obviously we would collect more. So there is always that possibility, but for what I always give you guys every year, since I've been here, the forecast of where I think we're gonna be in call volume, and we have plateaued out somewhere between 6,000 and about 6,400. And we're not seeing gigantic increases in call volume. So that would have to equate to also transports. So at the end of the day, we could increase rates. The only thing that would affect it possibly is the 10% of private pay, which would be Aetna, Blue Cross Blue Shield, you know, those standard private insurances, because honestly, people have private insurance, they pay their bills most of the time. So, but for Medicare, Medicaid, and Oregon Health Plan, it is capped, and we could charge $1 billion. They're going to pay the same $600 or whatever their cap is set at. Anybody have any questions for Eric?
So we need Intel to move in.
We didn't tell yes, Rick. We really do.
That is like a stock engine that you had in.
That is a stock engine. That is not a custom build. That is their entry level model engine, which has everything we would need to do. But still, it's $1 million when 4 years ago we bought them for $600,000 or $460,000. So it is what is the cost is the cost. And we can talk about other stuff when you're done.
Yeah.
So I just want to make sure if you guys have questions, you guys can send them directly to me. I can send to Eric, or you guys go send them directly to Eric if that's what you like. If you have any follow-up after this, when you have time to digest it.
I do just have this last slide. My general observations from doing this forecasting model was that the personnel costs being so closely tied to property tax, I think if the district makes it like an internal goal or strategy to keep the personnel cost equal to or lower than the property tax revenue, I think that would be really helpful. We saw in the slide up here that in previous years, it was creeping over the amount. This red line is the personnel costs. This green line is property tax. And when the red line is up here, it's depleting money from the other areas of the district. So I think just generally, if the district could try to keep the personnel costs at or below the property tax revenue, that would be good. The other thing I noticed was that I said the materials and services combined with the debt service is pretty close to the charges for services revenue. I think this relationship could be used to plan for future increases in debt payments. Like if you knew you were going to get a new engine, if you want one, decide you're going to get one, maybe not next year, but the year after, you could really focus on materials and services and debt service, try to keep them as low as possible to like build some reserves for the debt payments that would be coming in the future. And then just to reiterate, the other sources or uses of income are not regular, they're not repeating. So this thing that gets left over is capital outlay. Doing the work with M&S and personnel, like being really diligent with that, will allow you to save money for capital outlay. And that's just what I noticed, observed through going through this process. That's all I had to say about that.
Any other questions for Eric? Well, Eric, thank you for the report and doing the forecasting. We do appreciate all the support you give our organization and giving us a roadmap on where we need to go and some things we need to definitely think about. So thank you. If they have any questions, we will forward them to you, Eric, in the coming weeks. And we'll be seeing Eric again here probably after first year. We'll probably talk about budgetary adjustments and start for planning for our next year's budget.
Yep. My pleasure. And yeah, I'm really open to questions and answering questions. So don't hesitate to ask anything if you have questions.
Okay. Cool. All right. Thank you, Eric.
Thanks.
I'll leave the lights down for next week. So again, for the board members that are present, obviously we're recording this, so President Welby, Mark had to go to another meeting, said he'd be back in about an hour. The goal here is to educate, and we need to talk about support. We need to talk about where this organization can go, and we just need to be diligent in what we spend our dollars on effectively, and making sure we're giving the best bang for our buck for our citizens. So the next section is going to be done by Fleet. Are you prepared to? I am. Okay. He's going to give a status. Yeah, actually, if you guys want to take 2 minutes, grab something to eat, please get some. Jeremy's going to go over our fleet status of our equipment. So if you guys like to grab something to eat, you can.
And in those 3-ring binders in front of you, so it's easy
You're gonna
to
go back on the
see,
call, right?
the same reports in there laid out for you.
this back. Yeah.
Leave that sandwich. Bill.
I'll grab some of the stuff.
Jeremy does cookies.
That's how we make.
That's how we will.
I know you're bringing it.
Everybody. See you. You guys on the radio all the time.
More so this week than ever.
Chief, 1,000 year for ambulance. Budget.
Well, that's capital. It wasn't all for ambulance. So that would be, and we'll talk about it when we get to the rest of it.
For outfitting it.
Yeah, for outfitting and other things too. So yes, we'll talk about it later. Well, and you know it's gonna go up. They ain't gonna keep it. Yeah.
Thanks, whoever put that together.
That would be Kate. Makes those in her office. In her spare time. Little charcuterie board or whatever.
Side business.
Done.
All right, Jeremy.
All right, that's a tough one to follow. So we're gonna start off talking about a frontline engine. The national average for a frontline engine replacement, 15 years frontline. Then moving to a reserve status, which would be a volunteer engine. Hold on to it for 20 years. Our little urban area here, we're a medium-sized city. We're not New York, LA. You know, we're falling right between that medium and suburban level. So we hold on to our apparatus longer. We don't use them as hard or as much as a big city would. So when you look at those numbers, that's kind of where I built these bar graphs that you're going to see in this presentation from. And as you can see from that slide, NFPA actually does have a suggested replacement model. And NFPA it's not a law, it's a guideline. It's an industry standard. Every fire district has their own budget constraints, and we saw that in the previous presentation. This is a supporting document on lifespan of apparatus. We have pumpers engines, 15 to 20 years. Aerials, 20 to 25. Water tenders, as we call them, water tenders, 15 to 25 years. The overall average of the fleet, again, 15 to 20 years. Now, ambulance, we're not going to go by the age of the vehicle. We would go by mileage. Ambulance run a lot more. We see a lot of miles put on our ambulance, a lot. The national standard on ambulance is changing about 200 to 300,000 miles. In this bar graph, you see that you're going to see, I built it 250,000 miles. So every year, annual insurance schedule adjustments. Every year, SDO kicks the form to me to go through and audit, review, change the cost of replacement costs for these apparatus. So our 2020 Rosenbauers would fall under a replacement cost valuation that you see right here. The replacement cost is a like new apparatus. A few years ago, when we had an ambulance, one of our newer ambulance getting a head-on collision on Highway 30, that was a replacement cost because it was a new enough vehicle. They said, go find one. We found one in Iowa, and that was during COVID, and we went and got it. So that replacement cost is huge. That means the district isn't going to take it hard, budgetary. When we have to replace that apparatus, insurance is going to cover the majority of it. That's also every component that is fixed to that vehicle, mounted in that vehicle. So a few years back, we purchased the auto loads. Auto loads for the cots. You guys are familiar with that purchase. They were about 30,000 a piece. Being that component is now fixed in that ambulance, I had to go through and raise the adjusted value of those units another 30,000 on their spreadsheet for replacement cost. The 2020 engines that we had, I went through, and even though we paid 550,000 for them, to replace one of those engines now is approaching $1 million. So I had to bump that up. If I miss one of those, they will never pay more on an insurance claim than what we have adjusted on that sheet. So it's a critical task. Any questions about that? So on that sheet, you can see the 2011 newer emergency service vehicles. That would be your fire engine, your ambulance, things of that nature, is gonna be a replacement cost. Anything older than that will be a functional replacement cost. Functional replacement cost is simply go online, find a comparable vehicle that we could buy used, and that's what they're gonna pay. So when we had that little Freightliner catch fire in the bay, it was old enough, it was functional replacement cost. That means even though it was a great little engine, pumped perfectly, ran perfectly, great shape, we only got like $45,000 for it because that was the used market. Moving on. So in these slides of the apparatus, you're gonna see the age of the vehicles. And you're also gonna see the hours on there. This slide right here tells you kind of where the industry standard is. When you see 10,000 hours on a vehicle, industry standard is gonna say 45 miles per hour per hour. So that's 450,000 miles on that engine. So that's why I threw this document in there. Okay, first up, we have a 1984 Western States Ford water tender. 22,000 miles, 1,600 hours, 41 years old. I'm 45 years old. So, and I feel old. So that water tender is up there in years. This one's currently in response group 74. You're gonna hear me say response group 74, 71, 74, response group 74 is Deer Island. And that's where that one's living right now. Now, don't get me wrong, our vehicles are still running incredibly well because they've been maintained very well throughout their entire life. They are showing age though. They absolutely are showing their age. Next up, we have a 1987 Western States International, 21,000 miles, 1,600 hours, 38 years old. This one is currently in response group 7-1. Response group 7-1 is at St. Helens Station. That's a staffed station with career firefighters. Next up, we have a 1987 Western States International sister tender to the last one you saw. 17,000 miles, 1,300 hours, 38 years old, response group 75, a volunteer station up in Global. Next up, we have a 2009 Ranco military chassis Freightliner. 8,600 miles, unknown hours, 16 years old, response group 76. This is our newest water tender.
Does that one have a hour meter on it?
That one does not. No, it doesn't. And here's that bar graph I was telling you guys about. In the blue, you'll see the current age of our apparatus. The typical frontline service, you're gonna see in orange. And the typical lifespan of the vehicle, when I say lifespan, that's after it's ran through the volunteer status, the reserve status. That's when the national average is pulling it out of service. We have a 1992 Pierce Lance Telesword, 43,000 miles, 2,700 hours, 33 years old. That one is in response group 76, which is Rainier Station, a staffed station with professional firefighters. Again, you'll see the bar graph. 18 years frontline service, 25 years moved out of the fleet. 1993 Freightliner Rescue. 42,000 miles, 10,000 hours. Again, that's where we get into that, looking at the hours, right? The wear on that engine. 32 years old, response group 79. Response group 79 is LBTC over here. That's volunteer apparatus. Doesn't mean that apparatus would never get grabbed by a career firefighter. Yeah, that is our graph. 1994 Union International 4900. 53,000 miles, 4,700 hours, 31 years old, response group 79. This apparatus we purchased used from Newport Fire. What, about 7, 8 years ago?
It's longer than that.
10.
2016.
Okay, long time ago. It's still running great. Like I said, all our apparatus are still functional. 2003 Pierce Contender, 120,000 miles, 7,400 hours, 22 years old. Response group 7-1. St. Helens Station, busiest station, rear firefighters. 2003 Pierce Contender sister engine. Both these engines were bought at the same time. Mileage, 150,000 hours, 10,333. Age 22 years, response group 7-4, up at Deer Island Station as a reserve unit. 2020 Rosenbauer Timberwolf, these were purchased in 2020. 10,000 miles, 591 hours, 5 years old, response group 72. Fairbound Station, the staff station, career firefighters. 2020 Rosenbauer Timberwolf. This is the sister engine, 13,000 miles, 400 hours, 5 years, response group 76 in Rainier. And here's your bar graph showing where we lie in that and then national average replacement schedule. Now I'll move on to our medics. 2002 F350 4x4, 243,000 miles. Hours unknown, 23 years old, response group 71. This ambulance currently this one is medic 473 out of St. Helens Station. We have a 2011 GMC Savannah, 236,000 miles, 7,700 hours, 14 years old. Response group 77. Response group 77 is Fern Hill Station. That one is fully functional. It is not stocked. So if we had a catastrophic failure of one or other units, we could grab that one and throw it into the mix if we had to. We have a 2008 Ford F350, 181,000 miles on it, 6,000 hours, 17 years old, response group 76. That's medic 478 out of Rainier. 7314, 2018 Ram 3500, 216,000 miles, 2,300 hours, 8 years old, response group 72. That's going to be, again, that's Fairground Station, that's gas station. We have a 2018 Ram 3500, 218,000 miles, 3,300 hours, 8 years old, response group 771. That's going to be medic 471. The 2022 Ram 4500, 149,000 miles on a 2022 chassis. This is that one that we picked up during COVID when we had that other motor vehicle accident and it took one of those 18s out. 5,500 hours on it, 3 years old, response group 7-1. This medic is currently being ran with the single rolls as medic 4 across the radio. We have a 2021 Ram 3500 4x4, 110,000 miles, 4,100 hours, 4 years old, response group 7-6. This is going to be medic 476, first out in Rainier. We have our newest purchase that we purchased this last year, which is the 2025 Ford F350. 7 months old, already has 13,500 miles on it, 410 hours. Response group 7-1. This one is running as medic 492, which is the evening shift of the single medics. Again, you have a bar graph. Mileage on the is in blue. The suggested frontline mileage, 250,000 is what I put it at. And to move out of the fleet at 300,000 miles. We have a 1995 K3500 4x4, 62,000 miles on it. 30 years old, response group 7.9. Good little brush truck. Currently it's up at Global. Usually it's at LBTC as a response group 7.9 unit. We have a 2008 Ford F-750. Mileage on this unit is 49,000 hours unknown, age 17 years, response group 7.5. This vehicle is used mostly for conflagrations. It has a Caterpillar engine. That's a 2008 Caterpillar engine. And with the emission standards they threw on in 2008, it's a problem. It's a problem to run short hauls. It needs to get the miles on it for that system to work, function well. We have a 2019 Ram 4500, 19,000 miles, 1,600 hours, 6 years old. This one is currently in response group 7.6, one of our brush trucks. 2021 Ram 5500, 8,000 miles, 48 hours, 4 years old, response group 7.1, St. Helens Station brush truck. And again, with the bar graph. Okay, this next part of the presentation is simply to let you know what the vehicle costs look like when we're talking about fire engines, fire trucks, water tankers. Just so you can kind of see where the prices lie right now, as I'm doing this presentation. This is simply information that I got from vendors, you know, because I'm always pricing stuff, knowing where the market is. In 2027, the emission standards change once again, and prices will go up. They will. They're changing the warranty period on the emission system. They're changing a lot of stuff, so the prices, every manufacturer is gonna raise their price because they have to cover that warranty that they're making them do. Estimated cost of a 2,000 gallon tactical tender is $556,000 from one vendor that I got. This is nothing fancy. This is a 750 GPM pump. This is a stock unit. I want to be clear that all of these that you're going to see are stock units. There's no build up on any of these. 3,000 gallon water tender, 625,000. Spartan fire engine, stock unit, 960,000. So these next three slides are going to show stock units that are coming into True North, the local manufacturers, that they actually have ordered. And so it shows that we have a capability of getting a fire engine quicker than, 2-3 years. Now, if you go through, and these are three different models, so the price changes, the specs change a little bit, the engine changes, the transmissions change in these units. So you'll see a little bit of a price fluctuation. But the actual vehicle itself, the compartments, all that stay the same. Pierce, this is what I've got from Pierce as far as a Pierce Saver, which is their stock unit. Stock unit and demo. People that have been around the industry long enough, we've heard demo a lot. Demo and stock are the exact same thing. It's just something that's going to be produced off their assembly line, pumped out, and here you go. This is what you get. Doesn't mean you can't make changes to it, but changes just cost more money. So with Pierce, it's 24 to 27 months. They can accelerate it to around 12 months, depending on the details, which means, some upfitting or whatever you want to change up. No pricing on that unit at the time. Any questions for me? Again, this was just informational.
Any questions, gentlemen?
How many, like light duty trucks, like fleet maintenance, what are all those at? Or what, how many do we have?
Those are, we call it, so squads, right?
Yeah,
Squads. So we have 2003 Chevy Tahoe. We have a 2008 Ford Expedition. We have GMC, the 2019
19.
GMC, 2020 Ram.
2005 Chevy still.
Yeah, the 5 Chevys still running around too.
Yeah, that's right.
Yeah.
And then we have, so we have 3 of the 2020s, one 2022 Ram. Am I missing any? I didn't put those in there.
Well, you've got 2 utility trucks, but those aren't squads.
The reason I didn't put those in this slide is there's no need for anything like that.
no, I was
You
just
know-
wondering what we had.
Oh, okay, yeah, because I wanted to emphasize on this truly the needs of the district. Because it's, when you look at those bar graphs and the national average of replacement, it's really eye-opening. Like I said, our stuff is still running really well, but with every vehicle, as they get older, more problems present themselves, right? Especially when you're carrying water in a steel cell. You know, whether you're talking about your pump or your tank or just components on the chassis, you get a 40-year-old vehicle, you're not going to be able to call a vendor and say, hey, I need that door handle. You really have to start, searching far.
Do we have a reason we are chasing like medical calls in the engine versus outfitting one of the squads to chase one of those to save hours, mileage?
That's strictly chief level.
That's, yeah, that was it.
So operationally, there's several things that we wanted to consider. Number one is you need to make sure we get guys some seat time behind the wheel of the engine, right? So they're getting to go on calls. Number two, we've had, not lately, but last year, a number of calls where the engine's been able to respond to a fire immediately and not have to go back and recover the engine and go to a call. As spread out as our district is, it makes sense to have an engine be able to respond where there's a car accident, a fire. Honestly, at the end of the day, most of the time they're not. But it's without getting seat time behind the wheel and driving the apparatus on a regular basis, we seem to have more accidents than we normally do.
I'm just thinking the cost to replace those engines is $1 million now, where if we had a squad chasing on at least anything inside of 7.1, 7.2, you're saving.
That we
I
have,
mean, a lot of those short term.
no, 100%.
20-minute, 30-minute run times.
The operation committee is continue to discuss and evolve that, so that could change again. So there was a time we were chasing with another ambulance. So either way, yeah, you're right, we can get equipment there. But if you're where it's just the distance.
Yeah.
And I'll use Scappoose as an example. Most of your guys' calls are within a mile, a couple miles of your station. Most, not all,
Yeah.
not most. But for us, it is how far they go out towards Fairgrounds or out towards Deer Island or Columbia City, you're farther and further away. It takes longer and longer to get back to the truck. So again, it's not that we're not considering, we are looking at all avenues. And yes, I agree, but it does put more wear and tear on that equipment.
You guys have any more questions that I can answer?
Okay.
Thank you for your time.
Thank you. Gentlemen, need a cookie? You're gonna need a cookie. Then you're gonna need cookies. You're gonna want a cookie for this next.
Only
session.
shots and Okay. Cause how many squads do we have just hanging out right now, not being used?
Probably, they're all 3.
Seven, 6, and 7.
Yeah,
Yeah.
even, I mean, trying to save mileage on the brush truck.
Thought with that for years here, same reason,
Yeah.
guys are on the utility and Look at that getting
One
in.
thing that we do have right now, Austin, is a bunch of young new firefighters.
Yeah, no, and it's definitely not a bad idea to get wheel time and drive in and, I mean, as much of that as possible, but I think you're talking about, like I said, trying to replace these engines and $1 million a piece.
Well, there's no doubt the Pierces have had a hard life. I mean, when you start looking at even ones where I worked in a city where the general distance from the call and the station is shorter.
Yeah.
The fact that we have 150,000 miles and 10,000 hours, I mean, we've had a lot of calls. They've done their service. They need to go someplace to retire at one of our quieter stations, but we got to find a way. That's the whole point of this workshop was to bring knowledge to not only the board, but to our members of where we are and where we stand. So this next section is the operational cost for emergency services. This is something that Fire Defense Board has been discussing for almost a year now. I offered to put something together for the various districts. This is not the way, as we talked about earlier with KT, Talitha asked a couple questions about like ambulance revenue and stuff. This is where what we collect is absolutely the standard across the entire country. Most fire departments or EMS services collect somewhere between 25 and about 30%. A good year might be 31 or 32%, but on average about 30%. That 30% is what we function this entire organization on. So as you can see with the payroll has been following along with our tax revenue for a number of years. In 2020, it jumped up significantly. We went way above the green line and we've come back below it. But we're right where we were before 2020. And so there's a cover letter. You gentlemen don't need to read the cover letter for right now, but if you go to page 2, we'll start with page 2. This is this was brought from July of 24 to June of 25, our collection rate. So the first graph at the top and our graph is it lines out the call types. We have an ALS1, an ALS2, and a BLS transport. There are codes. That's what the billing departments use to determine that. So if you look on ALS1, we ran 1,799 calls, transports. We charged $4.192 million. We collected 1.3, about 30%. Average bill and to delete this question about rate, we could charge $1 billion. It won't change what we're going to collect on most of our calls. So our average call, if you guys can see that column there, 2,300 to about 2,275 to about 2,300 some change, 31, 32, 25%. The average collection, again, there are ones we don't get paid for. So averaging across all our calls, from about $570 to about $770. That's the amount of money that we reimburse. You won't hear me use the word revenue. We don't generate revenue. We are a public entity. Our job is to recoup costs associated with treatment and transport and taking care of emergency situations for people in our district. Uncollected fee varies from $25,000 to $2.5 million. Kate and I met with System Design West, which not only does the third-party billing for us, but they also do it for Klatskai and Scappoose and a host of other departments in the state. And I asked, the first question I asked was, are we doing something wrong? Are we not getting signatures? Are we not collecting the information? What can we do to raise that amount? There is nothing our folks are doing. On average, and you'll see further down, we'll talk about that here in a minute, where we collect versus what we bill for. There's nothing else that will change our bottom line revenue, or sorry, not revenue, our reimbursement, other than additional call volume or transports. So as you guys can see at the bottom there, we ran for that fiscal year, 2,468 calls. We billed 5.725 million. We collected just over 1.7. Now we do collect, so, and I'll hold off on answering that. So 1.7, you guys can see the collection, the rate, and then what was basically wrote off or uncollectible. The next one down is the payer production statistics. This is a breakdown provided by System Design West. So in the first box, you're going to see Medicare. Medicare equates to 57% of our transports. So you might as well call it 60%. 60% of the people we take to the hospital are on Medicare. There's part C and there's part B. We transported 1,415 different people to the hospital. which equates to about 57%. Bill 3.2 million, we collected $921,000. That is because Medicare is capped. We could change our collection rate, or we can change the amount we charge. AMR just increased their rate significantly. But again, the reason why AMR and these privates can actually continue to make a profit for their stakeholders and their people that own the stock is because of volume. They run tens of thousands of calls to our 2,400. So as you guys can see, 28, 30, 28, that's for Medicare. You drop down to the next one, it's Medicaid. This is Oregon Health. This is Oregon Management. And I again, took them out and you start looking at it, you can get even more dismal. We had a question about this. Systems on Web did another look into it. That we are getting exactly what we're charging per capped again, because Oregon Health is the same, Medicaid is the same as Medicare when it comes to the percentages they're willing to pay. So, but a larger, I mean, when you look at total 1.44 million and we collected 265,000. Commercial insurance is what we all have, which is Aetna, Medicare, or sorry, not Medicare, Regis, Blue Cross Blue Shield, any of those. We billed 724,000. We collected just shy of $500,000. So privates do tend to pay, but they are 10% of our calls. So 1 out of every 10 transports you make is a private pay, and private pays generally pay the bulk of their bills. And then finally, at the bottom is we had 119 transports, people that did not have any insurance, and you can see bill $275,000, and we collected, 19.
Yeah, not to be a dead horse or anything, but on the commercial or the people that we do collect from are private insurance people. Just out of curiosity, have you guys run the numbers? Like if you did increase the ambulance rates by 10%, even if it only was a 10% increase that affected that, has anybody run the numbers? Like, cause that could still be another 40, 50 grand a year that you guys are recouping.
It could.
Costs.
It could.
And I know that there's other fire departments, like I know AMR and stuff increased their rates, but I think Clackamas Fire did as well. TBF&R increased rates. So some of the fire departments are also doing it as well. Is it worth even at least running numbers and revisiting?
And we have. So when we look at it's built into our system, there's a 3% increase in it every year. So there is already a natural increase to it because of obviously inflation, cost of doing business, right?
Mm-hmm.
We are speaking at Fire Defense Board to see what Scappoose, us, Class and I are charging and how far off we are. Well, the numbers I've looked at, it's not very much different. I mean, it isn't like we're charging $1 million and they're charging $10. They're relatively close together. And this really only affects, again, 10%. If you had 10%, you're right at $40,000. I'm not saying we're not going to not look at it, but again, it's such a small percentage of our overall transports. When you guys transport 80-90% of our people are on some type of government assistance, which is Medicare, Medicaid, or Oregon Health Plan. So
I was just thinking, you could probably refer to the increase right there, though. A 10% increase.
Potentially. So the next page, gentlemen, is the questions I had asked. So the one I first talked about, again, we asked about a couple different things. Of the transports that are billed every month, less than 20 get kicked back from System Design West, and those are reviewed by the lieutenants and Chief Wonderly, Chief Schrotzberger, and collect the additional information, maybe find a signature, maybe run down some information. So when you look at over 200 transports in a month and we have 20, it's 10% or less, and 20 is at the high end. On the average, it's less than a dozen. So it's not very many that our folks are missing something that could potentially, aid us in getting reimbursed. I asked about a large discrepancy. System My Web came back yesterday. We are collecting the right amount for Oregon Health Plan for Medicaid, Medicare. They did review that and said that I thought maybe we were missing some money in there. Clearly, we're not. Go ahead, sir.
Do they set their own rate then? And when was the last time that went up?
So the federal program, Medicare, there's another program that we subscribe to, a number of departments do, is Ground Emergency Medical Transport. So you'll be heard, it's called GEMT. GEMT, I'll reserve my comments for it, other than it is a way for fire districts and ambulance companies to recoup costs, because obviously clearly whatever we bill is not what we're collecting. So this is a way to increase that a little bit. It's a program that is not set in stone. It's not set where we guarantee it 10 years from now. It is year to year. But on average, we collect anywhere between $250,000 and $350,000 from that. So if you add that to our 1.7, then we collect approximately $2 million, our hair over $2 million on our ambulance revenue. And you saw Casey's, Eric's projections up there. He's adding a percentage up there. So every year we should be going up a few, 10, 50, $100,000 theoretically if our call volume continues to increase. What was discussed at Fire Defense Board was the cost of operating an ambulance. So the next section is projected costs, and I started with Division 9, our EMT paramedic combination. We took 2 calls. We took a basic standard, I need to go to the hospital because my tummy hurts. And then we took a high, what's the word I'm looking for, Aaron? The critical, thank you. Critical incident. So if you look at the 2.75 is an average. We have calls that are longer than that. We have calls that are definitely shorter than that, but on average, 2.75 hours. That's the time the bell goes off, the folks jump in the truck, take off, get to the hospital, come back, restock, approximately almost 3 hours. If you look at the cost breakdown, we did the employee costs, and I have this later in the how I came up with these. I averaged the cost of the employee's hourly rate. I took the cost of the ambulance and depreciated it and came down to it basically according to looking at Jeremy's slideshow, is that an ambulance has about a 6-year shelf life. And so depreciating an ambulance from new to being tossed at 6 years is $135 roughly a day. And then the mileage cost is the cost to operate an ambulance, meaning that's repairs, that's services, that's fuel. On our older rigs, it's higher. It's 64 cents a mile. On our newer ambulances, because clearly they don't have as much wear and tear, and they're obviously newer, 55 cents a mile. And then the training, which Chief Wonderly provided, this is based upon their hourly the number of hours they work in a given year, not overtime, not shift trades. So for EMS Division 9, it is approximately 2,308 hours a year is what they work. And I took that, divided that by what it costs to outfit them, train them, and the ongoing education every year. And it came down to $3.54 for an EMT every hour they work. And for a paramedic, $3.74 per hour for every they work, and that times that by 2.75. So I came up with the cost for that, $354.43. What we average reimbursement is $690.
Something I don't think is averaged into there is their standby time, because not just the time of the call,
Correct,
but
it's
then
not.
they're sitting there.
Yes, sir. And you'll see later in my package.
Okay.
So yes, sir. Here you go. You go to the next page. This is obviously would be a high, a critical call. A lot of folks that need to be on it, a lot of equipment, a lot of supplies. And so same things were calculated in. Most of the time we have a critical, they take a second rider. So there's a base call average of 677.92. And if I had to put a second paramedic on there, it's just a few pennies shy of $800. Again, we collect $790. And we have probably 1 or 2 of those a day where we send 2 or 3 people to the hospital. With a critical, you can see the breakdown. This is provided by Chief Schrotzberger on what the supply costs. So on a basic abdominal call, I don't feel good, my tummy hurts, about $7.45 in supplies. Somebody that's truly in a cardiac arrest and the amount of stuff that we could potentially use is $330 for that call. The next 2 pages, all I did was that was a EMS based ambulance. The next is our fire based or fire staff units. So this would be our firefighter, EMT, firefighter, paramedic. There is a slight increase. I don't need to go through. It's the same call. I did was take the call, average their pay for. I took the average year of what a firefighter work was 2,880, and that's how I came up with the based upon the hourly rate. Ambulance depreciation the same, supplies were the same, training a little about double than what it costs to train the EMT or paramedic. And this also the PPE and uniforms that are required for a firefighter compared to a Division 9. So it does definitely go up a lot higher because of the being dual role. So for the same call, 405, we would collect roughly 690. And then we have one for the major. And again, with the major adding a second firefighter medic or a second Division 9, it's definitely more than we collect. The next page is the cost breakdown. Basically just told you guys how I did it. I verbalized it. If you want to see it, that's how I did it. Paul, to your point, the next page is factors, costs that were not factored in. This would grossly change the amount this is. This is, like I said, that is a bare bones. This is what it costs for two folks to jump in a rig, go to the hospital, or three if it's critical. This is all the things that were not factored in. And this is basically the cost of running a business. So clearly, obviously, information technology, cell phone, our infrastructure, employee support, all the stuff that goes into taking care of our employees, the utilities, the staff that takes to manage, because just like a U.S. Army division, you can have a bunch of combat guys, but combat guys don't do well if they don't have ammunition. Guys fix their trucks and feed them, right, and pay them. So those are, and then legal services, which is huge, which is, you guys have seen our budget, is a lot. So these were not, this stuff was not factored in. If it did, it would have been a lot more in depth, and also it would have taken longer to do. And so these are things that we could factor in, but it's definitely going to skew the numbers even higher above what we already not collecting. The bar graph, which makes you kind of want to, maybe your stomach now hurts after looking at the bar graph, but honestly, this is it. This is what all emergency services throughout the country are seeing on a regular basis. If you look, the left column is the red is what we charge. Blue is what we don't receive, and green is what we do. So on average for Columbia River Fire and Rescue, we bill approximately $450,000 a month. We collect on average 140. That's how we come up with our 1.8. With GMT pushes us over a little over $2 million. System Design West does also Scappoose and Clatskanie, and when I asked, they obviously, I mean, this is all information anybody can obtain. The Clatskanie and Scappoose are collecting the same percentage. Scappoose bills approximately $200,000 to $250,000 a month. They collect 40, roughly. And again, these are just spitball numbers. She didn't actually show us. Clatskanie bills about 140, collects about 30. When it boils down to, it's the same 25 to 30%. It's volume. It's the only thing for Columbia River. It's just the number of calls we run. It is. So this bar graph, this is from October or July of 24 to June of 25. And this is a revolving number. So just so you guys understand, we can't just say from this date to this, how much do we get reimbursed? Because it could be from this date, we're reimbursing stuff from 6 months ago. Because they're constantly adding that. So in real time, we could run a number right this minute and tell you this is how much we collected to date. But tomorrow it'll be a different number because obviously more things come in. The following pages are basically how Fleet came up with the cost of the mileages, and also what Chief Wonderly used to how we calculate out how much it costs for a year one employee on an annual basis. Now, I want to emphasize this to everybody, those listening in virtual land and everybody sitting here. We're not upside down. We are functioning. The department has funds to continue to operate. We're going to have to find some things our equipment's old. Clearly, you just saw a fleet that just went through there. Our stuff is not old. It should be in a museum, but it's still functioning. It still works, but we're going to have to explore other ideas, or how are we going to maintain providing equipment for our folks to be able to go out and take care of the public. Clearly, we're budgeting for an ambulance. We can buy an ambulance every year, and we need to buy an ambulance every year because we operate 8 ambulances. We have 1 in reserve, and on a good day, we have 6 on the road. So we have, or 7, sorry, 7, 8, 7, sorry, 7. My bad. I'm getting overside. I want to hire and get another one. So we have 7 ambulances, 1 in reserve on a day when we're fully staffed, which we will be fully staffed in the spring. We're running 6 ambulances a day, and our 6 ambulances a day are just covering our calls. And for the foreseeable future, our staffing model that we've developed with 3215, this board and our staff is working. The fact that our EMS Division 9 folks are taking the lion's share of the calls allows our firefighters to train more, allows our firefighters to be in town for when we do have those fires, car accidents, or hazmat. We're making it work. The problem is our stuff's old. And to be honest, it's been old for a long time. It wasn't a priority in prior administrations to get a lot of new equipment. We need to get an ambulance. Oh, we can't get it this year. Well, maybe next year, and then we buy one. The problem is we got off that plan. I've directed Fleet to come up with a policy that the board will see, and we will review with them for future. What's our replacement cost? We don't have one. What is kind of I call it the shoot in the hip. oh, we need a fire engine, which clearly we do. Our two Pierces are tired. They are very tired. But as you saw with KT's report, how do I buy one? So there are some things that KT didn't speak to, she doesn't know about it. But I want to, there is a new measure called Measure 50. We met with our county tax assessor, very nice lady. She came out and actually did a class for us. Measure 50 allows taxing districts to tax land up to 10 acres of unimproved land throughout their area. So there is a chance, and they have no idea. They cannot tell us how much that's going to be. It could be $5, it could be 50,000. We don't know what that amount's going to be. So we will see some increase in our revenue next year. Eric can't speak to that. He can't put that in his forecast model because this has never been done before. And according to our tax assessor, her and her staff of 14, it's going to take them all the way to October. It's not just for Columbia River, it's for everybody in the county and everybody across the state. That could be an amount of money, but we don't know what that is. So we can't budget on something we don't know the exact amount. Like I said, it could be $5. Hell, we could owe people money at the end. I doubt it, but I'd rather be cautious and be optimistic. And then we see maybe a little nice windfall that allows us to have some breathing room. But we're not in a bad spot. I cannot emphasize that enough, gentlemen. We're not in a bad spot. But you could see moving forward, we're going to have to figure out how we're going to make things happen. So we've talked about bonds. A bond would be for capital. Clearly, our vehicles, we need to look at replacing some vehicles. Our water tenders, they look great from 50 feet away and they still run, but finding parts for them and keeping them, but they're not something that we use very often. Even Scappoose and Clatskanie. Water tenders are infrequently used, but you still need them because we have to have them. Brush engines, those are great. We have brush fires, but not a lot. So we have those, and those will last us a really long time. What we need a lot of is ambulances and some fire engines for our staff stations. So we hoped that there might have been some funds in there that we could sneak a fire engine in, we could afford one. But we're gonna have to think some other things, or wait to see what Measure 50 does. And then again, gentlemen, what I'm asking for support is if we're going to go for a bond, the board's gonna have to be intimately involved in helping develop it and getting out and working with Local 3215 and our volunteer association and getting the message out and getting our folks to understand in the community where we actually are. And we need a replacement. We're replacing our ambulances at a rate that is acceptable to us now. We have 6 frontline ambulances. And so if those 6 frontline ambulances are replaced every 6, the one we just bought today, 6 years from now is going away and there'll be another one to replace it. That's great. We budgeted 400,000. You saw with what KT had up there, but in 6 years, what's an ambulance going to cost? Right now it's $293,000. We bought the last one. So could it be 320, 340? We also add an autoloader. There's things that our folks need, and we want to make sure we take care of them. So we got some work to do, and it's not insurmountable. We can do it. So at this point, I open the floor for questions, comments. We can talk about all sorts of things.
Have you reached out to like Portland or Seattle or any of those, Plum Valley, Clackamas, about any of their stuff reserve that's possibly going?
So no, I have not. And it's not something that I would like to, and here's one of the reason. So Rick was still here. We bought those 2 H&Ws from Bellevue, 2016.
Mm-hmm.
And they were great engines for the period of time that we used them. They ended up again trying to find parts. Getting an engine that's been used by another department that had 80,000 miles and 10,000 hours. You just saw what Jeremy said. I mean, it's functional, but is it a frontline piece of equipment? It's not. That's the drawback. I love my old vehicles. I got an old Bronco. I'll drive that thing anywhere. If it blows up, I have a truck. I mean, I know I can get that towed home. It's not my primary vehicle. When we have a fire engine, that's the primary vehicle for our station. Those guys have to have a rig that we trust that it's going to make it from point A to point B. Our fleet does a fantastic job of maintaining them. But again, age and wear and tear, you just never know when something's going to pop on them, right? So that's getting something from Tualatin Valley or Portland. It's going to have 100,000 miles. It's going to be no different. I mean, it might be in slightly better shape than our Pierces, but I know when I worked for the city of Upland, our average call was 2 miles from our station. You talk about destroying the Detroit 60 series, drive 2 miles to a call and drive 2 miles back and do that 40 times. You guys know it's the engines don't mind pumping. They love it, but it's when they're sitting there idling or it's that short run. Diesels want to get out and drive. That's why big trucks are not gassers. They are diesels, is because they want to get out and go and short. Rick can attest to it, and so can Jeremy. Short haul stuff on a diesel is tough on a motor. It wears it out faster.
Well, nothing breaks down in a convenient location.
No, sir. No, sir.
I mean, there can be good deals on used equipment if you look,
There could be.
but they're few and far between. They're hard to find.
Yes, sir.
I know, Tuolumne Valley just bought some used. Cause some departments, big departments, especially back east, they replace them on time. Like every 5 years.
Right.
They rotate their fleet. And you get into one of those ones and you can actually get a good deal. But like I said, a few and far between, a lot of people want to grab them,
Correct.
so.
It'd be like going on eBay. But the other thing too is I want to point out, so we also looked at their, we used to do remounts on our ambulances, right? We'd send it off, they'd get a new chassis, slap underneath there, put some new paint on it, but it's still, whatever year that box was, that's the box that got put on a 2025 chassis, right? They're doing that now for apparatus, because I brought the same thing up. I like restoring cars. I love it. I love old cars. But again, they're not my primary source. If we were to go with a refurb, we'd lose the engine. We are not adding capacity. We would just refurb it. The problem is the engine is still a 2003. So
You can put a new chassis under them.
you could, but then you're getting, I'm
It's
talking,
still cheaper than new, but
about fire.
especially on water tenders.
Correct. You could have,
You can easily, I've got a department I work with that has, what is it, a 2009, it was remounted, water tender, but it's on the chassis was a 2009 over the road truck.
right.
So it replaced a 78 or 80 truck chassis. Put the tank on it and did some work to it and, some upgrades, and you can remount them on a newer chassis.
Sure.
So,
And again, Rick, that's not off the table.
yeah,
That's not off
that's
the table.
for less money, and it's an interim. It's like buying the used Bellevues.
Yes, sir.
So,
So,
yeah, we're looking at, everybody is right now with the way the world is. Everybody's looking at tight budgets. We gotta figure out a way to make it work.
correct. And the disappointing thing about the revenue, and this is the goal, my hope is that we can spur the conversation at the International Fire Chiefs, IFF, Oregon Fire Chiefs, that we start engaging our senators and congressmen. The fact that when Medicare pays this amount, and yet our costs are X and we're getting Y and we're in a negative in Z, and you want us to continue doing services, how do we do that? They need to look at, and GEMT is a Band-Aid. It really is. When you look at the number of calls we have, I don't recall what Class Guy or SCAP who's collect on GEMT, but it's based upon a percentage of whatever you make or whatever you get reimbursed. It's not a huge sum of money if you're only running 400 calls. But if Class Guy, SCAP who's us or anybody else was getting actually 50% or 60% of what they charged, more than what we're currently at 30, our budget would look a lot better for sure. And so would everybody else's.
Do you know, just off your head, what the valuation of that 9th Street property is?
Yeah, I actually do. So I reached out to several realtors. I finally got one that actually did her homework and did a very good job for me. The current, what she believes the market value would be around $800,000. And she said, there's nothing, and I literally talked to her, Rick, not even 30 minutes before this meeting. She said, there's nothing really moving in commercial wise in Columbia County right now. Oregon is in a recession. If you guys have seen the reports, Oregon and about 30 other states are in a recession. There's other ones that are not. Yeah, clearly we are. But so there's not a lot of building going on. And she said, you could put it up for sale. She goes, I believe you could probably get 800,000 for it. But she goes, it could take you 2 years to sell it. She goes, I mean, if somebody has to be looking for that particular piece of land.
That's on that hard rock. It's gonna be a hard land to develop.
It is.
Cause it's on that hard bluff rock. But that property never was ours. I mean, it was given to us by Boise, but we traded to get the training ground property we have over here. That property really, I remember when it happened, that was supposed to be a property trade and it wasn't ours, but we have it now and it's got a value.
Yes, sir.
So
No, that is also a consideration, but it would again, if I put it for sale tomorrow, couldn't
no,
guarantee
we
we'd
would,
sell. So that's all.
no, it'd be whenever it's sold.
Yes, sir.
It'd be wait and see. So. And it's a one-time shot. You'd buy one piece of apparatus.
Correct. And again, that is also under consideration. We also measure 50. We have no idea. We're limited, right? I can't generate more revenue. We can potentially raise our ambulance rates, and there's no guarantee that's going to be huge sums of money. We have other things that we didn't talk about that need to be replaced. Our monitors, our EKG monitors. We're looking at how can we fund that and still be within our budget, not go over. And that'll be something hopefully I'll be talking to you guys at the board meeting next, because our monitors need to be replaced as well. So it's these mechanical devices. Obviously they have a shelf life. And they also have a useful life, and at some point they cease being productive. And so, but we need to provide the services and equipment to our folks, so they can go out and take care of the public.
Are you guys still using Philips?
Oh,
The
Legal law.
new one that we got, like when I came?
Yeah.
So- How are we, I think you said, but how are we compared to other departments with the cost of the ambulance?
In the county?
Yeah, in the county,
we
outside of
give-
the county, just the statewide.
I did not ask statewide, I asked for in county, and she provided the rough number for Clats County and Scappoose. That'd be the only two that run enough calls to be closed. What helps Columbia River is our volume. 2,468 transports. I don't know what, maybe Austin can speak to it. I don't know how many transports Scappoose does, but I'm gonna assume it's probably 800. And I'm assuming Clats County is probably 400. When you look at if you look at their call volume, I'll use Clats County just easy, 1,000 calls. If 800 of them are medical aid, and we're only about 50% refusal rate, now you're down to 400. So you've got about 400 transports that they're billing for an entire year. And then 400, they're getting 30% of that. So that's where they're at. So we asked, I flat asked, I said, is there other places? She goes, it didn't matter if it's Portland, Clackamas, here, Salem,
The
Klamath
cost
Falls.
per trip, is it about the same?
Yes,
Okay.
you saw 2,300, that's on average. I haven't seen what AMR's raised their rates to yet. But across the state, we're actually one of the higher ones
Okay,
with a rural area.
so it'd be hard to justify raising, probably.
I mean,
We've already raised it.
yeah, it's a hard pill for, our taxpayers to swallow too. But what I talked about at Fire Defense Board was, what if we took our rates and so us, Class Guys, Scappoose, all charge the same? If whatever that amount is, where they get to come up, or we go, whatever that is. So what I make a joke at Fire Defense Board, that I don't want to be standing on Heath Road and somebody goes, well, Class Guy's $50 cheaper, I'm gonna go with them. I mean, you don't get, that's what I want, I think, to be fair for any citizen. Clearly our fire med does work. So on fire med, Talitha asked yesterday, we collect 65,000 K. And according to Systems on West, 7,000 was used. So I mean, it's not, that money's being put aside, but it's still less than 10% is actually being utilized. So we're generating some type of reimbursement that not everybody's using. So people are buying insurance. It's no different than insurance on your house.
Yeah.
But if you need it, it's nice to know, hey, that ride's not it's gonna cost your insurance. We still bill the insurance.
Yeah.
We just, whatever insurance pays, no one comes after you. No one says, hey, Paul, you still owe us $1,000.
Do we bill past the insurance? I mean, I guess if they're an Oregon Health Plan, probably not gonna send them a bill.
No, if they're Oregon Health Plan or Medicare, Medicaid, that's why when you're at retirement age, right? That's so those folks aren't getting
Yeah.
happed with the $2,000 bill because Medicare paid $500.
Yeah.
So, yeah. So there's no way it would be cost prohibitive for us to go after folks for that.
And morally questionable.
Yes, sir. Yes, sir. So we can discuss lots of things. I think the biggest thing is, and I want just people for everybody's knowledge is, we've got some work to do, and I believe we're gonna have to go for a bond. Now, there may come a time, and Clats County and Scappoose both have levies. We do not have one. Doesn't mean that one day in the future, we may not need one. But what we do need is infrastructure. We do need equipment to keep our folks out there doing the job and respond to the calls. And so I think in future board meetings, and maybe probably another workshop in the spring, is talking about how do we proceed forward with a potential bond and or a levy, whichever is determined, to continue to operate this organization into the future. What is hurting is compression. So for us in Columbia County or Columbia River Fire and Rescue, the city of St. Helens has us in compression because of various projects that are going on. And we lose about $100,000 out of our budget every year. It's taken out before we even get to that number of KT shows. So that's already pulled out. Rainier is somewhere between 20 and 50. And I didn't ask any more if Columbia City or if the county had any, but at the end of the day, it's somewhere between $150,000 and $200,000 of compression we lose every year. And the other thing is enterprise zones. Chief Pritchard is on a committee at the state level trying to work with them to remove emergency services from enterprise or TIFs or any of those potential areas, because when we're asked to respond to these places, but they're not paying into anything, it's a difficult pill to swallow. And clearly you can see our tax rolls are coming in we are getting subdivisions. There's 2 subdivisions coming in, about 160, 180 houses. On average, you can figure $600 to $800 a house. So if I have if I have 100 houses, that's about a $60,000 or $80,000 increase in our tax rolls. Once they hit, so it takes a year after they get in. So we are seeing growth. I've done dozens of driveways out in the hinterlands and in the city of St. Helens, they're putting subdivisions in, and the current number is around 100 homes already. So we are seeing growth, but the problem is that growth is a year or two down the line, and we can't calculate that in because for all I know, an economic disaster could happen tomorrow, and they don't build the houses. So that's why it better be extremely conservative. I asked KT to be, I said, I want you to be conservative. If we get a windfall, great. Maybe next budget year, the taxes came in higher. We have money now we can put down on a fire engine. But I would not want to indemnify this district for 5 years on something we don't know if we can pay.
And see how much we can put in reserve
Yes, sir.
Yeah.
annually, get a
Yep.
vehicle reserve account going.
Yeah.
again. We used to have one.
That's a good idea,
Mhm.
like to start saving.
Yeah, at the end of the year, you put extra left over in.
It's disturbing how long it would take, like if something broke or, I mean, you're 2 years out on even getting one. I
Well,
mean, even if we had the money.
correct. What's nice is they have these stock units that are, they each, and they don't always have them, but they got 4 coming down the pipe. And that's what we were hoping was, could we afford to make the payment on this? The training grounds, the last payment is 2037. Our budget, 3637 will be the last payment. We pay $190,000 a year to the training grounds. So when that training ground's done, what I would emphasize, or at least if I'm here or not, or hopefully that next chief, if there's somebody here in my place, would emphasize, take that 190 and put it away. Now, is that, so when we talk about the reserve fund, that's 200 you've already been paying for almost 30 years. Put it aside and then put it in that fund, and then you could have some funds you can have $500,000 every other year.
Well, our stations are gonna need some work on them before then too.
Correct, yes, sir.
I mean, it's. Fire engine's not the only, the
No.
only expense we're gonna be looking at.
Absolutely, sir, absolutely. So again, it's not doom and gloom. We're going, this was to educate, and also it's gonna spur the conversation. We're gonna have to have more of these workshops to discuss how we move forward. And if it, and my vote, it would be we go for a bond. We need to fix our stations, especially the 3 staff stations, and we need to be able to provide some equipment to replace our alien stuff. And some of our equipment, the Pierces, they're still got function as training engines or as a very backup at a volunteer station. They're just no longer frontline. They can't be and be reliable.
Is there any value in them and selling them? Probably not.
No, scrap. I mean, at the end of the day, no one's gonna, I mean, if you look, the KME, the level 94, I love that engine. I know it's hated by a lot of our guys, but at the end of the day, that little truck will drive everywhere and she pumps every time. We bought it for 15,000 because when we bought it from Newport, they got a new engine. The company that they bought the engine from was gonna give them 15 for the engine, so they just said, well, what I'd rather give to somebody else. So we paid $15,000 for it. It's gone on a number of con flags for us and been out of county. It's probably made us several $100,000 on a truck we paid 15 grand for. But it's also 1994 technology. It is. It wasn't designed to carry the things that our folks are carrying now. So do you have any questions, or this is new for you, but I mean, I'll answer whatever I can. Okay. Well, gentlemen, again, I want to leave today with, it is not doom and gloom. We're gonna have to be diligent. We're gonna have to be cognizant of our spending, and we're also gonna have to find other ways to make sure we get our folks the equipment they need to respond to the calls.
Good plan ahead.
Yes, sir.
Class gonna deal with the same thing, or
Well, yeah, we always are,
Everybody's
yeah,
gotta be.
yeah, every, you know, it is with the levy, every 5 years, you're making sure you pass
trying
that.
to make sure.
Yeah, I heard a rumor here this last year when we did ours, that there was somebody pushing a, Tualatin Valley, I think it was pushing a measure that if you renewed your levy 3 times, that it became permanent. And I wish somebody would do that.
Yeah.
Put a measure out there that would make that happen, because that would show that if you've renewed it 3 times, there's obviously a need.
That would be
Just
interesting.
make it permanent.
Yeah, interesting. So one of the things,
Push to fail.
yeah, but again, I think they get enough votes up there. I think it's
But that,
viable.
yeah, all that is based on public opinion of the district of the job we're doing.
Yeah, a smaller station, man, $1 million engine.
No,
We didn't look at, yeah.
I was trying to find out, Gresham just ordered some, contenders, sabers.
Mhm.
I'm not just seeing what they're paying for them, because Pierce is pushing that a lot right now, the stuff out of Florida. at a lower price. And it's funny because Gresham's always bought top of the line with multiplex electronics and
Right.
everything in it. And now they're going back to switch and relay technology in the cheaper trucks because that's what they got to do. So.
No, it's, it's not a laugh, but I think about when my dad, I remember him buying a truck in 1984. And the truck had rubber mats, it had rubber floors, a stick, it didn't have air conditioning, it was just a bare bones truck. If you wanted all those other bells and whistles, they got up. No one has that anymore. And a fire engine has gotten so technologically advanced that it is, it's again, going from, we bought them a couple years ago or 3 or 4 years ago at 465,000, and now we're paying 900, and that's for exactly how it comes off the assembly line with small little tweaks to it. That's it. And if you want a custom engine, somewhere, Jeremy, what did they tell you, 1.4? 1.3 for if you want to change a compartment or do something else, even a water tender at $500,000. If you asked 4 years ago, you buy a water tender for $250,000, $300,000. Now they're doubled in price.
So what is it that's changed it?
Well,
Go ahead, Rick.
I was gonna say, a lot of it's just the emission stuff. That is gonna be changed. I don't know if that 2027
I hope.
change is gonna happen because it's being rewritten right now. Yeah,
$500,000.
The new administration is changing that. They're dropping the cafe requirement
Yep.
too down. I just heard that last night. That's gonna go down and emission stuff's all changing too. We don't have to have D rates now on DEF systems. If you have a DEF system error, it won't derate the truck.
Oh, really?
Yeah, that's new one coming down, that the derates won't happen. You'll still get warning lights, but the truck won't go into limp mode. Because they can't seem to fix them. You know,
Right.
right now they're set to derate if you have a DEF problem. So the truck drivers can't keep driving, but they can't get parts to fix them either, which is sidelining vehicles because they can't repair them. So they're taking away the derate stuff. It's gonna go away. So there'll be some changes coming up. We'll see how the next 3 years do on that. They'll make it easier on us. Like I say, the cafe requirement right now is set to go to 50 miles to the gallon by 2030 as an average fuel economy of all your vehicles you sell.
Including pickup trucks?
Well, that's, if you know what cafe is, it's been around forever. It's been around since the 80s. Corporate average fuel economy is a government
Oh,
standard
yes.
they set out for your mileage, and you have to take all the vehicles you sell, pickups, cars, Hondas, EVs, everything. Average, how many total you sold, what their average mileage is, and get an average fuel economy for your sales. And if you don't hit that target, you get fined per vehicle by the government for that. So that's built into the cost of your vehicles. They know that we can't sell. If I sell one F-250 that gets 20 miles to the gallon, I gotta sell a hybrid over here that gets 70 miles to the gallon to get me an average.
Yeah.
Or 3.
Yeah. So anyway, first of all, Trump's taken away the cafe and the big beautiful bill. They took away the fees. If you don't meet the cafe, there's no fee. There's no fine. So that helps right there. But now they're dropping the cafe down from 50 miles to the gallon, which was pushing to all EV stuff, to 35.4 miles per gallon is gonna be
Okay.
the new one. So now that's a target we can hit. That's a target that's much more, and I don't know if the manufacturers will drop prices or just take the extra money in their pocket. But I mean, because they have that fee built into the vehicles. They know that we're gonna get dinged on this by the government. We're gonna charge them more. So I don't know if we'll really see it come back to the consumers, but hopefully we'll see some reductions there, which will help some of that. Yeah, like I say, there's a lot of changes that are happening in the next 3 years, that'll hopefully be good for us on the vehicle side. They're even looking at trying to give us exemptions from some of this stuff that we haven't had under the last 10 years in emission stuff. Our fire trucks they can run out of oil, have a low oil alarm going off, and you can't shut it off. On our over-the-road truck, if you run out of oil, the truck shuts off. I mean, they take away all those shutdowns because we don't want the truck shutting down. There's firemen in the building. When they came out with all this emission stuff, the DPFs, the SCR stuff, and all the emissions, they wouldn't give us exemptions. So we have to meet all that. But it's funny, federal government vehicles don't have that stuff on them. If you go look at the military rigs, they don't have any of that on them.
Yeah, go look at water tender 6.
Yeah.
So why would emergency services not be the same standard?
The
as
reason
military?
I was told that EPA would not give it to us is we are in the same environment with the diesel engines driving around in town as garbage trucks, as transit buses. They would all want exemptions too, because they still got a big over the road.
Going to fire.
Yeah, but they got over the road diesels and they're running around in town, stoplight to stoplight doing this stuff, and it's terrible on the emissions. And they don't want to give any exemptions. So
Well,
we've never
no.
got an exemption.
Not only our equipment, but Paul, you hit on the head, our stations. our stations, if you look at Fairgrounds and Deer Island, was built in the seventies. Goble, Fern Hill, the same thing in the seventies. It's been 50 years, over 50 years. We need to, what I would love for us as an organization to do is set up somebody 50 years from now, can look back and we're all dust in the wind and go, those guys set us up right. The stations need to be able to we need to, they never thought that Fairgrounds might want to have more than 2 guys at it. And that's where and same with Deer Island. You know, St. Helens Station's got enough to bunk 7 people. We need to bunk more than that because that might be a necessity. Rainier, there's lots of issues with Rainier Station need to be fixed. And so a bond, that's why I said the infrastructure to ensure that we have a good place for our folks to go back to. And then we have good equipment for them to respond to. That's the priority. And I think that's what we talk about over the next couple months. And then probably have to, I have Kate and I have a meeting with the SDO bond person that helps us set up that we can start looking so we can bring that information back to the board so you guys can make a decision. Because ultimately, we got to start with equipment. I think once equipment's done, we can talk about where we're at financially when it move into the future. Our staffing right now meets the needs, and the way I forecasted out and similar to what KT did, we're looking at we have a good 5-6 years of our current staffing, unless something drastically changes and they build a 10,000 home subdivision over here or give us 3 or 4 more giant apartment complexes. That would definitely have an effect. But as of right now, with our current status, with the houses are getting built, our current staffing model will meet that for at least the next 5 years for sure.
Now, the enterprise zones, when do those come online? The new ones, the apartments and.
So I have a meeting tomorrow with Mr. Walsh from the city of St. Helens. That's the biggest one. You know, there's not much getting built in Rainier that affect that, but city of St. Helens is our number 1 largest and most, emergency need response group 71. So I'm meeting with Mr. Walsh and Mark and I are gonna go see him tomorrow and I'm gonna talk about that because I've been looking, I would like to see a map of where and how are they determining when and what goes into an enterprise zone. Clearly,
And for how long?
Yeah, one of you guys, somebody said that we need intel, right? Yeah, we do need, if we got something like that, but if they put it in an enterprise zone, that doesn't help us at all. So on average, if you look at our bigger commercials in our, we have Columbia River Nitrogen, right? We used to be Dyno Nobel, we have USG, we used to have Armstrong, we had Boise Cascade, now it's Arcadia. All those make up about 10% of our budget. Dyno Nobel is about, that's of our budget when it was tax revenue. USG is probably $100 million plant. And we collect about $250,000 a year in revenue from our tax.
It takes
revenue.
quite a few houses to make that.
It does. It takes
One big business can make up a lot.
Yeah.
I mean, if you think about it, so yeah, you could do the math, you could divide that by 600, 800, which what a home would be. It would be probably close to 300 or 400 houses to make in a USG. We're still rural Oregon. People are still pushing out of the cities to come out here. And so there is still opportunity for that to come up. So I think we're going to see more. I mean, when I looked at KT's thing in the first, my heart skipped a beat. When he went to 2037, I said, we don't know what's going to happen in 12 years. And in 12 years, they could build Disneyland right over here off of South 9th. I mean, they're not going to, but they could, but we don't know. And so, I mean, and NASA's going to come here and build a launch platform. It's not going to happen, but we're going to see things. And we also don't know what the economy is going to be in 12 years. So I said, honestly, for us, and also for when it comes to planning, 2 to 3 years out is about as far as we should be looking. Don't get me wrong, we should try to forecast out and have a better idea, but we really need to focus on what we can see in the next, 36 months.
So the Rainier Station, if you were gonna do something there, would we look at building a whole new one? Would we remodel that one?
There's again, that would come down to a cost.
Yeah.
So we gotta look at a bond. If you look at St. Helens School District, it was $150 million bond. I don't know what, I don't live in the school district, so I couldn't tell how much it actually does charge the taxpayers, but $150 million over 30 years is a very long time, and it's quite pricey. I'm sure it's a couple $100 per household. We need to be realistic when we start looking at our bond so Rainier Station, I mean, if you ask my gut check right this second, you gut the inside of it, rebuild the inside of it, make it bring it up to code. And you can resheet the outside, you can make it look pretty.
Yeah.
And without having to tear the whole thing down.
Yeah.
It's got decent bones. It has poor wiring and it's got terrible the way it was designed. It was designed, Rick, when was that built?
It was built in the 70s.
70. Okay. So 50.
It was built in the early 70s, same with the fairground or Deer Island or Goble and Fern Hill were up at the same time. But we looked at building a new one. I went to Classic and they were process of trying to do Lost Creek property that we got up there at Lost Creek. And that project went to, I think the last was $5 million to build a station on that property.
All right.
Develop and build.
Yeah.
So to build a new station in Rainier, we'd be looking at probably at least 5 million.
Is that steel building?
That is a steel truss building.
We went to,
It was missing. We did a earthquake seismic upgrade years ago. And it was supposed to get a seismic upgrade and then ended up St. Helens Station ate up more of the budget than it was supposed to. But they cut holes in the sheetrock down there, did some looking and found that there's some of the diagonal bracing was not installed. The diagonals on the,
Yeah,
some of those in that, and it's got the wood structure, the living quarters, the bracing's not in there. It wasn't put in there. They found when they cut the holes in the wall and we're looking that there's stuff missing in that, but that project got cut because St. Helens went over budget and the money got spent on St. Helens. Which St. Helens, I could show you some old pictures of that remodel when they did that, because they gutted the station inside.
I remember when they did it.
And that old part of the station is actually scary.
Yeah, it's old.
It's old.
really old.
Different kinds of brick mortared together and so, so yeah, but if you took that building down to, like you say, I don't know if you've seen over there at J.H. Kelly in Longview.
Yeah.
Like they did, if you strip that building down to the steel frame and then start over.
Yeah.
The steel frame, the bones of it are good. It
Save
does-
on permitting and engineering and.
it would save a lot,
Yeah.
yes. So, and that's
Well, and you
where,
could second floor a lot of that. That's something I always wanted to do, is second floor up there above the back of the bay. Yeah, we don't need that tall ceiling height in there. You could mezzanine that out over the back half of the building and have the front be high and the back be lower and have a whole bunch more square footage.
You'd have ground level back there too, but show it.
Yeah, cause you're right to the back parking lot.
Yeah, so you walk right.
I mean,
in.
there's a whole bunch of
Changes
changes.
around the building.
the key is for Rainier especially, or in stations, is that 50 years from now, they could have 10 guys working in that station. Right now, you can't, there's enough to put 4.
Yeah,
And it's a gigantic building for 4 people.
Yeah.
So, again, though, that's all, that, when I ask you guys for support, that's the support. It's gonna require your guys' participation more than a board meeting, more than a board workshop. It's gonna be going out pressing palms and kissing babies. When we start talking about that, it's gonna be work on design. We're gonna have to bring members of the public in, members of the union. It's gonna be a lot of work, and it's a multi-year process. You guys are well aware of that. It's not somewhere, hey, this year we got,
Yeah.
$10 million, we can do a bunch of things. It's prorated out. So that's just said, the positive is there are things we can do and we can make changes that will benefit this organization and benefit our citizens.
With bargaining with the union. I mean, the hard thing is we pile money up. Do they want more? Like, the wages go up. And then as putting it in funds, would that be a good way of diverting money so it doesn't look like we got a whole big fat bank account that,
Well, I would never want to, again, where I've worked and where being here, I want to be 100% as open and honest.
Yeah.
Here's where we are. And they have to negotiate, as an agent, I negotiate for you guys, but I bring it back, you guys all can make the decision. Whether you agree with 3215, but at the end of the day, they're well aware of where we are. That's why the whole point of this meeting was, it wasn't we're not going to say, don't look back here, don't look behind the curtain.
Yeah.
Here, there is no curtain. Here's it all on the table.
Yeah.
What do we need to do to move forward? And I think they're on board. We have done some fantastic stuff over the last couple of years that, collaboratively. I mean, again, I will never tell you I'm the smartest guy in the room, and I don't ever want to say that. But as a group, we're intelligent as hell. When I talk about all the people on staff, all the people on the board, our union members and volunteers, we can figure stuff out together. So no, I would never want to do that, Paul. I would rather it be out in the open. Here's where we are. And, you guys asked for this, there's a consequence to everything we do.
but would it be more clear if we put it in budgets?
I'm talking about for apparatus.
Yeah, for like so much for a firefighter, fire engine, so much for buildings.
I think you can. I think when you guys just saw there is that we have, we have discretionary, non-discretionary. Non-discretionary is basically everything we do, which is fuel, food, or not food, sorry, the utilities, the buildings, the vehicles, all that stuff, medical, all the employee costs, that's all non-discretionary.
Yeah.
What's discretionary is about that $400,000 to $500,000 is all we have. That's the extra money we have that buys an ambulance, maybe buy some medical equipment, buy some fire equipment. That's it. So if we start cutting into that, that's gonna get what I call zero, we could get to zero growth.
Yeah.
KT talked about, average of 250 to 350 a year is what we go up about 3%. Well, if PERS jumps up $30,000, that's a percentage, right? If fuel costs go up or you tilt, whatever goes up, that
Cost of
starts cutting
living
into that.
goes up too, and
Yeah.
Cost of living,
Way.
the 3% cost of living cost of the district is 200 and some thousand, 238,000. And don't quote me the exact amount, but So if we only made 250 that year, we really only went up $14,000 because that 250 got eaten up by that.
Yeah.
So again, that's, I want to make sure 100% that everybody, this was all I ever asked for when I was a firefighter, is just show me the books.
Yeah.
Show me what you guys are doing and show me where, and I can go, yeah, I don't want to hurt us. I like having a job and a roof over my kid head and putting food in my family's belly. I want to be informed. And that's the whole point of these workshops, is to inform everybody. Financially, here we are. We're not bad, but we don't have a lot of money extra to go below on stuff that we really truly need.
Well, I could see if we keep going the way we're going, the next 4 or 5 years, we could afford a fire engine,
I believe
you
so.
know, but the problem is, one thing could be bad. And,
Yeah,
and we,
those
and
are
our,
wild.
and ours gonna last that long.
COVID really drove a lot of stuff up.
Yeah.
COVID.
What's our
the
tax rate right
COVID,
now?
297
And what's, class nine?
297.
So we're all
with the
Our levy and combined is the same.
with the levy, okay.
Yeah, the two of them are the same as Columbia Rivers.
Okay.
If we had never merged with Rainier, we would have been at I think it was 4.25, 426 1,000 before we merged.
in Rainier
And St. Helens was the highest tax rate in the city, in the state.
at 4.
It
Wow.
was 4 something 1,000
Man, I didn't know
before
that.
we merged. Rainier was $1.37. And when we merged, they came with a blended rate of 298. So had we never merged, we'd be sitting fat and pretty right now.
So that, and I want to thank you, Rick. That's what I want. So to understand that, the reason why we have compression is there's the maximum they can charge you or anybody, commercial or residential, is $10 per thousand.
Yeah.
Well, if the government is charging, which means the city is charging $9.80 and Columbia River Fire and Rescue charging $2.97, what is, it reduces. So all the taxing districts, it reduces their amount they get. For us, we get $287 per thousand here in St. Helens. I get $260 in Rainier. We don't get the $297 because Rainier is actually at what'd she say, $11.57 per thousand. And because of that, we don't get as much because they're to bring it back down. They have to take from us 911.
Take from everybody.
Yeah, and so
Well, yeah.
just because you do something, there is corresponding reactions to other taxing districts. So
We're, hoping and praying to class guy that next comes in eventually. I mean, if that ever does, but I don't know if that'll help the whole county or just Clatskanie area.
it depends on what people buy. If they put a subdivision in Rainier, it'd be great, but if not, I mean, so there's possibility there.
That's
Again,
industry that would
Yes,
be big.
tax and-
Is it getting any closer?
Supposedly they're 1 permit away from groundbreaking.
For how long?
That's,
I mean, that was 2018.
yeah, they're supposed to be close, but like it
I
keeps
was,
changing.
I was on the Redco board for a little while and they kept wanting us to raise taxes. And that's what we saw is we could raise our rate, but we're not gonna get the full amount that we raised. And everybody else is gonna take from all the other entities.
Picture of a
well,
school,
that,
the fire
that,
district.
that committee that Chief Pritchard is on, and there's multiple officers and members from across the state. So their government is $10 per thousand. School is a whole nother one. So what they're proposing, from my understanding, is emergency services is their own as well. Because we're lumped in with the city and 911, all those ones for one in particular area. So you can pull us out. One of the things I'm gonna be talking to the city about tomorrow, and I don't even know if they can do it, is can we talk about keeping emergency services out of enterprise zones? Can you do, I don't know if they can. So it's gonna spur the conversation. I want to see the city grow. We want the city to grow. But at the same time, as you put an enterprise zone that comes in and it's there for 10, 20, 30 years, that has a direct effect to the emergency services that are provided there.
Well, the emergency services aren't gonna be that huge
No,
to keep business out.
no, sir.
Is this why all of you're seeing it huge along Clackamas County is now swallowing up every small district? Is that just because the districts can't afford to?
I honestly believe so. So I'll give you an example in when I worked for San Bernardino County Fire. So San Bernardino County, the city of Needles, California, paid into San Bernardino County Fire $450,000. One battalion chief almost cost that much. I mean, battalion get done to it. So they didn't have it. So San Bernardino County, the bigger districts took money and they paid. And that's how they staffed the station there. So they had a battalion chief, a captain, and three firefighters. And that's what they did. But it was Fontana, which is Central Valley, CSA 39. Basically, they have there's probably 1.5 million people living there. Their taxes help fund that fire station out there to keep it up. So that's probably what Clackamas is going to have to do is they're not going to be able to generate enough revenue reimburse through taxes to cover that station. So that means somewhere else in Clackamas is going to have to pay for that.
Yeah, I mean, they've got, you look at Hillsborough or 12 Valley, they've got Intel.
Correct.
Well, yeah, but you can only merge one time. After that, it's annexation.
Correct.
So when you merge, you get a blended rate of the two districts combined and averaged out. But once you annex, you take on, so like Wood Village, I know is one of them that's looking at being taken up over there. If Wood Village's rate is less than Clackamas's,
It'll
then
have to go up.
Wood Village would go up to Clackamas's rate. It would go to the new district's rate. So,
But again, we're still small. I mean, there was a talk about the high school right up in Rainier to, go with a bond. It's $43 million. There's 2,000 people living in Rainier that would have to pay back $43 million. I mean, it would, well, and Rainier in the outskirts, right? But still, there are a few thousand people would have to pay back $43 million. It's a lot of money. So, obviously, when you have more population in Clackamas and Twelve Valley, there's more opportunity to recover those funds through tax revenue. We just don't, we're rural, more, just like the other 30 some odd counties in Oregon, right? It's
Or more industry.
we need
Or-
more industry.
Yeah.
That's what we need. We need to build things our own again.
we do. I 100% agree. You gentlemen have any other questions or comments? Anything else you want to talk about? Well, I do appreciate you guys' time today. This was recorded. We'll provide it so those the members that want to watch it afterward. We did send this all out to the union and went district wide. So the packets that the what went out was the packet that I came up with and what Fleet did. That went out to everybody. Everything else, KT obviously it just was on the screen, but they can look at it in the future if they like. So, but I appreciate your gentlemen time. Those are yours to keep. Those are your packets and your folders. You can keep the whole thing, Paul.